Right. Without further ado, we're going to go to Hannah, and she's going to give her talk. Hannah's very experienced working in town and parish councils in terms of finances. She's also a qualified accountant. So we're going to do questions at the end, but use this opportunity. You've got Hannah. She pretty much knows the answer to all questions. She gets caught out once or twice. I've done these sessions many times to her, but it's rare that she actually gets caught. After a talk, we're going to head over to Stuart, my colleague Stuart. He's just going to show you a little bit of Scribe, a sneak peek there of how Scribe can help you do year end. And yeah, then we'll go into the Q&A. Drop all the Q&A into the chat, and I'll kind of keep an eye on it. And then I'll call you up to ask the question because we always like to see your faces. But anyway, so over to you, Hannah.
Thank you very much, John. Hello, everybody. Nice to see you all here today. Let me just share my screen with you all. So a quick little bit of housekeeping before we get started. Number one is this is an intro to the AGAR. It's all about what the AGAR is, what we need to think about when we're completing it, how we can prepare and what we're going to do with it once we have completed it. It is not a Scribe specific session. So if you're a Scribe customer, you're very, very welcome, but it's not going to go through how to do the actual year end on a Scribe. If you're looking for that, do have a look for our Mastering Year End on Scribe sessions, which we run separately. There are also some pre-recorded versions of that in your Scribe account. And secondly, is that the session is being recorded and the slides will be sent out as well after the session because there's quite a lot of information in here. I looked last week if I could take anything out, but it's all important. So I've crammed it in. So there may be some bits where I sort of skip through reasonably quickly, but you can come back to that when you get the copies later on. Okay, super. So let's go. So what is the AGAR? I wanted to start with that because I saw in the sort of the chat and some of the bits there is that lots and lots of newbies and people who maybe haven't really done this before or have some uncertainty around it. So it's just useful to obviously start right at the beginning and recap what it is and what it entails. So the AGAR, the Annual Governance and Accountability Return, and we're working on the year-end period of the 1st of April to the 31st of March. So that's why no doubt you're all here today because March is rapidly approaching and obviously we need to get in a good position to be able to go ahead and get that AGAR completed. So there are a number of sections within the AGAR and we'll look at them each in turn in a little bit, but just to break it down, initially we've got the certificate of exemption if relevant. So if you meet the criteria to be exempt from audit, we'll talk about that in a moment. So just to clarify, you still have to complete the AGAR, you're just exempt from sending it off. So don't suddenly think, oh great, I haven't got to do anything, because you have, you just don't send it. Then we've got the internal audit report, section 1, the annual governance statement, section 2, the accounting statement, so that's the numbers bit, and we'll look at all of this in a lot more detail later on. And then section 3, the external auditor's report and certificate. So again, that's if it's relevant, if you've actually sent it off and they're going to audit the AGAR that you send them. There are also a few versions of the AGAR form. So obviously you also need to make sure you're completing the correct one. So form 1, I wouldn't imagine applies to anyone here because it's if you've got no financial transactions and then you're just exempt from the AGAR because there was nothing happening, basically. Form 2, this is if you are able to exempt yourself from audit, but you have to meet the qualifying criteria. So that's being under 25k for both gross income and gross expenditure in the financial year. So it's not one or the other, you have to be under both of them. You also need to not be within the first 3 years of being formed as a new council. And you also can't have had any issues with the previous year's audits and sort of statutory issues or anything like that that's come back from the external auditor, but you can kind of look at the actual qualifying criteria to confirm that. If that meets all those criteria, you can therefore complete the certificate of exemption instead. And that is what you send to the external auditor. You do not send them the AGAR. And then you've got form 3. So if you are over the 25k, so you therefore don't qualify for that. It's now under 15 million. It used to be 6.5, but they've put it up. So if anyone's that big, then wow, but that's good. But you can still do form 3. Or if you are unable or do not wish to certify as exempt, so it might be that you're under 25k, but actually your council would still like to go through the process of sending it off to the external auditor to have them formally review and sign it off. So all this information is on the external auditor's website. So I would suggest that if you haven't seen any of this before, go and have a look at it. You'll get the forms all coming through, but it's really useful just to have a little look exactly what's required of you. And if you haven't seen an AGAR at all, then it should be published on your council website, so you can go and review that and have a look. And it's often useful to see it in sort of the form of numbers that mean something to you within it as well. So a couple of quick questions, frequently asked questions that I think it's important to clarify at the start of the session today. So firstly, internal and external auditor. So I've already mentioned the auditor many, many times in this first sort of few minutes of talking. So just to clarify, we've got the internal auditor and the external auditor. The internal auditor needs to be engaged by the council to come and review the council's procedures, policies, controls, etc. That might be in person, it might be remote, but the council must engage that person and they must be independent to the council. So you need to go and make sure that's in place, ready to go, so that you've got someone coming in to do that. And all councils should have an internal audit at least annually. And having that internal auditor will then enable you or them to complete the internal audit report section of the AGAR. So you need to make sure that you've got that in place. Then we've got the external auditor. So that's determined by the county the council's located in. So you do not need to go out and find yourself an external auditor. You will have one already that you can then obviously be assigned to, and they will send you the forms, and then you need to send the information to them, either the certificate or the AGAR, and then they will review that for you. So you don't need to sort of do anything as such in terms of making sure that you just obviously know who you've got, and if you should have all your details on file so that when they send all the forms and correspondence out, you're receiving it. So if you make sure that if anything has changed in terms of the correspondence, that they're updated with that, so that obviously they can send you all the relevant documents and links that you need. The other question that comes up excuse me, reasonably regularly is thinking about receipts and payments or income and expenditure. So that's the two accounting approaches that you one or the other you will be needing to use when you are completing the numbers part, the accounting statements in the AGAR. And this is something that catches people out a little bit, because often we'll ask the question, are you working in receipts and payments or income and expenditure? And sometimes people don't know, or they'll confidently answer one option and it's actually not that at all. So just to clarify, receipts and payments is quite a simple sort of form of accounting, in that you're just recording what happens, when it happened, regardless of when it relates to. So you're making a payment, it goes into the cash book. You're not worrying about the timings of that it might not relate until next year. It happened, so you're putting it into the accounts. Income and expenditure, or I&E, is a little bit more similar to business accounting because it takes account of timings. So once we get to the year end, you'll start to think about adjustments. Have I got any creditors at the year end? Are there any debtors, etc.? And VAT is also stripped out and shown as an adjustment. Again, we'll talk about that in a little bit more detail later on, but just to be clear, you need to obviously know which approach you are using. So generally, as it says on there, if you are under 200k, so that's total income and total expenditure for the financial year, you can work in receipts and payments. If you go over that for 3 consecutive years, and that's an important part of this, you need to work in income and expenditure. So you may have a scenario where you go over 1 year because you've received some SIL money or a large grant's come in, something like that, that's taken you over the threshold. If you then return under that threshold and you don't remain over it for 3 consecutive years, you do not necessarily have to move to income and expenditure, and you can stay within receipts and payments. Having said all that, though, you can be a smaller council and still opt to use income and expenditure. Often that comes as a result of councillors or maybe the clerk being fairly financially minded and feeling more comfortable working in that scenario. But just be clear on which you're using. And if you're thinking, I don't know, then it's best to have a look at your AGAR for last year. Look at the accounting statements. And if box 7 and 8 are the same number in both of those boxes, you are almost certainly working in receipts and payments. If they're different, you're definitely working in I&E. Okay, and hopefully some of what we just talked about there will make sense to the size of your council and what you think you're actually doing. Also, just to mention at this point as well, that if you find yourself needing to or choosing to move, if you can choose to move between approaches, so receipts and payments to I&E or vice versa, you do have to restate the prior year. So when we look at the accounting statements a little bit later on, you need to complete the current year alongside the prior year in 2 columns next to each other. They must use the same accounting approach for comparison. So if you're moving between them, say had to go to I&E for this current year end, you would have to restate, i.e. redo the accounts of last year to also be in the I&E format. Use that approach so that the comparisons align. Okay, so do be aware of that. And that's something, if you know that's going to be the case at this point, you can go back and get that restatement ready. So you've got your position ready to go once you get to the 31st of March and move into this year, coming this year end. Okay, so we've had a little bit of a thought process about the AGAR, and we'll look at that in a lot more detail. But let's firstly just think about how can we prepare. So obviously we've got around 6 weeks now, a little bit longer than that possibly, to consider what we can do between now and the end of March to be in the best possible place, so that once we get to that point, we haven't got loads and loads of other bits that we could be doing now, basically. Firstly then, and I think that was a good point when we talked at the start of this, is that there's going to be additional work involved. You have got a whole form of AGAR and information to complete and to sort out, and your accounts all need to be reconciled and resolved, etc., in order for you to do that. So anticipate that extra work. Make sure you've got some time in your schedule to complete it. This is not something that you just do here and there, 10 minutes when you've got a bit of time. You want some time set aside. Hopefully you've already got a meeting in the diary for when you're going to be approving the AGAR to sign that off, so that you can then set the commencement of public rights, which again, we'll talk about in a little while. So that needs to be by the 30th of June. So hopefully you've got that meeting in the diary, and therefore you can work back. So you know how much time you're going to have to work on that, and you can set some time aside, hopefully, to do that. Secondly, up-to-date and accurate data is key. So the accounting statements, the numbers part, is going to come from your cash book that you're keeping. So your spreadsheet, your software, whatever it is that you're maintaining, the ins and outs, the bank rec, etc., etc. You need to have all of that, obviously, in the best possible position. You don't want to get to the 31st of March and think, well, I haven't put any data on for 3 months. I haven't done a bank reconciliation. My VAT's all over the place. Let's try and get that in the best possible place now. So monthly bank reconciliations are obviously good, because if you do it monthly and if you do have a problem, you've only got 1 month to then go back and look at to see where the problem arises. And also thinking about VAT as well. So VAT doesn't have to be reclaimed at the 31st of March. If you're VAT registered, then you're obviously likely having a Q4 that finishes to that point. But I very much think that it works well if you're working to completing VAT claims to the 31st of March. Now, you might think that's slightly counterintuitive because that's just making more work, but actually it's a really good check as part of the year-end process that everything is in place, you've collated all the data correctly, and you're able to claim all the VAT that you're entitled to. So do have a look at that as well. Make sure that's in a good place. Have you got other paperwork? Have you recorded your VAT numbers, etc.? So you've got all that information ready to go. Little extract there from the bank recs, so just making sure we're up to date with the bank. So that's just from Scribe, something in here that I've got my report in here so I can see it all reconciles, something similar to that. And a little extract again from my fictitious Scribe Parish Council on Scribe that just shows my VAT details. So I've come and checking that I've got everything up to date and it's all showing nicely in there. So the things that I'm just doing in the background to make sure everything is looking good. And then the third thing is preparation in terms of understanding what's expected. So have a look at all the documentation around it, the actual AGAR itself, because there's some good guidance notes in there. There's a checklist in there, and you can actually look at the forms that need to be completed. There's a link to this decision tree here that takes you through which there's yes, no answers to, so you can establish which form you need to complete if you've got any uncertainty. Do have a look at the practitioner's guide if you haven't seen that before. It was formerly JPAG, now SAP. So there's a new version every year, but there's a SAP version now. So that's basically the Bible when it comes to the AGAR. It tells you all the information that you need. So do make sure you've got, just download it. You can have a copy of that online. And as I mentioned, thinking about moving from receipts and payments to I&E, the question of do you need to restate the prior year, that also opens up to any other issues you might have found. You may have realised that something's gone wrong in last year, you found an error. Or if you're new to your current council, often that can flag something up. You go back and look at the accounts and realise something was done incorrectly, so it needs changing. Or occasionally the external auditor will come back when they sign off the certificate of the previous year. They'll make some notes in that to say what the issues are. They will have found something that's been incorrectly completed and state, for example, box 5 needs to be X amount, whatever it may be, and you need to make sure that you do that. So when you submit the current year's AGAR, the prior year is restated accordingly. So that's again something that you can be doing now and you want to get into place, particularly if your box 7 is changing, because your closing funds of last year becomes your opening position for this year. So you want to have established where you're going to finish so that you know where you're going to start if that's changing. So these are all the things of making sure I've got as much understanding as I possibly can around all of this. Okay, so let's imagine we're now ready to go. We're well prepared. Our cash book's in a really healthy place. We know what we're doing. We know which form we need to complete. We know we're doing it in receipts and payments or in income and expenditure. Off we go. Okay, so if we go back to the sections that we talked about. So here are some extracts from the AGAR. I did check this morning, but they're still the 24-25 forms online. So you'll have to excuse the fact they're actually last year's, but I don't expect this year that they're going to change significantly. And apart from the fact I think they're becoming accessible, but largely in the main they'll look as they do now. So this is the certificate of exemption. So we talked about that. So if you're not gone over the 25k, you can exempt yourself from audit. You still need to complete the AGAR and publish it on your website, but you do not need to send the AGAR to your external auditor. You just send them the certificate of exemption. Okay, don't send them both, just send them this. So you'd still go through the meeting, approve this, etc. And then this is what you send instead. And obviously you therefore save the external auditor fee because you've just sent them the certificate. Okay. So then we've got the internal audit report. So we mentioned the internal auditor a little bit time ago. So they'll come in either physically or remotely and review your procedures, the controls, etc., that you've got in place at the council. And at the very least, that the report that they do should therefore be able to complete this section here, which is all the points that they'll be checking. So yes, no answers to these, or possibly not covered if it's not relevant. So these are the things that they'll be checking, as you can see. So the precept's been set in an appropriate manner using a budgetary process rather than just plucking a finger at a number out of the air. Assets registers maintained appropriately, all these things that they'll be coming in to review. Okay, so that's why you need to make sure that you've got that internal audit scheduled and in place to be able to complete this section. And then we've got section 1, the annual governance statement. So we'll have a quick look at that firstly. So quite similar in scope to what we just looked at in terms of the internal audit report, but this time the council needs to complete this. So you'll go through as a council at your meeting and answer yes, no's to these assertions. Hopefully yeses, because it means things are in place correctly, financial management, internal controls, all those sorts of things are being done correctly. So just going back to this one here, there must be appropriate evidence to support your answer. So if you're saying yes, you must be able to back that up. You don't have to send anything, but if there ever was any sort of question about it, you need to be able to prove that yes, those things are being done correctly. If it's a no, so you might have come into the council or you might have recognised that some things aren't being done correctly. Hopefully you're addressing this, but actually you can't put yes at the point in here. You need to answer a no. So you'd need to give some further information as to why it's a no. You know, what's the weakness, what's the failing, what's happened, and what's being done to resolve it. And actually it's quite strongly linked as well to the internal audit report. So number 6 there is about having an adequate, effective system of internal audit. So basically, if you've had the internal audit done, then you've already got a yes in that box because you've made sure that they've come in and done that. So it's linked quite heavily, and it's all about, are you following the proper practices, procedures, regs, standing orders, etc., doing things correctly? Okay, so hopefully you're in a position where you can say yes. If you can't, you do need to give some further information as to why and what you're doing about it to resolve that issue. And then section 2, which is sort of the big part in my view, the accounting statement, the numbers bit. You've got to come and collate your cash book, your information, your accounts for the financial year, and put the numbers in the boxes. So you'll see there, we've got on the right hand side will be the current year. Obviously this is last year's version, but you'll get this for the current year, and you need to provide the prior year as well. So if nothing's changed with the year that was submitted from you last year, it's just a straight entering the boxes of what was submitted. Obviously, if you're needing to restate, you'll need to go through and update those numbers accordingly based on what the issue was or the reason you're restating. You will need to write restated at the top of that column and provide information as to why the numbers have changed and why, wherefore. Okay, so that's what you need to do there. And that's important, as I said, if you're moving from receipts and payments to I&E, for example, you must make sure that they're in the same accounting approach. So if we think about that, then how are we going to actually fill in the numbers? And this is something that when they've done the review about improving the AGAR that John mentioned earlier, one of the things they found that it doesn't very well clarify exactly what you need to do when you're working in receipts and payments or I&E and how you fill those numbers in. So if you are in receipts and payments, you're just taking the figures directly from the cash book. You're using gross totals, so the amounts that you've gone in and out of the bank account and the totals through the accounts, gross totals, quite straightforward, ins and outs, and therefore the closing bank position will match to your closing box 7 on the AGAR. That's why we talked earlier about box 7 and box 8 being the same when you were working in receipts and payments. If you're working in income and expenditure, two main things need to happen. Firstly, VAT is excluded. So the values in the boxes are net amounts. VAT's excluded, as we said, and becomes an adjustment between box 7 and box 8. And then we also think about any other adjustments. So earlier I mentioned creditors. So these are people that you owe for goods or services that you've had up until the year end. So you bought something in March, but you're not going to pay for it until April. That's creditor potentially there. Debtors, people who owe you, your customers. You've provided a service to them in March. Your customer hasn't paid. They don't pay until April or later. They are a debtor because they owe you for something that's happened in the financial year. It's all about thinking about timings. How do I need to adjust for things to make sure that the costs and the income show in the appropriate financial year? When you're thinking about those adjustments, a couple of things to think about. So firstly, the materiality, so the value of those adjustments. Do you want to set a limit? So you're only considering things over, say, £50, £100. You don't need to worry that you bought some paper clips last week for £3. We're not going to a creditor adjustment for that, for example. Also regularity. So this is really key as well. So if you've got 12 costs, something charges you monthly, even if it's in arrears, it doesn't matter hugely if you've got 12 months worth of costs in. It would only be an issue if the 12 month, for example, was significantly different. So let's say you had a grounds maintenance contractor every month. They charge you once they've been in. They always charge you the same amount. That's fine. If you've got 12 months worth of cost in, you've reflected that appropriately. If, however, in March they did a lot more work, the invoice was double, you're not going to pay them in April, you may therefore want to reflect that in March because actually it's over and above what normally happens. But think about those sorts of things. Salaries might also be a good example if they don't fluctuate that very much, about whether you need to adjust for things that happen on a regular basis. And obviously make sure that last year's adjustments are reversed as well. If you're using software, that should automatically happen, or you make sure you've copied everything forward correctly so that it does happen. Obviously, if you're in spreadsheets, make sure your formulas are good. You'll recognise those adjustments that need to reverse and things are happening correctly in there. Okay, a little extract from there, just from my Scribe Parish Council, about some examples of what might be creditors or debtors. So things where we've got to pay for things that have happened, as I said, that we haven't yet actually paid the invoice for. We've had the goods or services. So there's my debtors, where I've had provided the services of the council to my customer. They haven't paid. All the opposite things about that as well. So receipts in advance. I've had money in from customers for bookings, but actually they're not hiring that venue until next financial year. Therefore, I want to move that income into next year. So that'd be receipts in advance. I haven't got prepayments on here, but that would be the similar thing if you paid for something ahead, but actually you're not getting the benefit of it until next year and moving it along. Okay, so lots of things to think about moving and adjustments as we talked about. So just to bring that back from where we started the accounting statements, it's useful again just to look at those boxes in here that we need to fill in. So we start with our box 1 as our starting position and go through there. And also just to mention, this is the English version. So if you're here from Wales, it's lovely to have you, and I'm sorry I haven't got the Welsh version. The principle of the values of the boxes are the same, but the numbers I'm going to refer to in terms of the lines are slightly different, but the principles that we're working on is the same. Also to mention, they used to be called boxes, they're now referred to as lines. So I tend to still call them boxes, but boxes, lines, interchangeable here. Okay. So just some clarification, some useful pointers on all of those boxes, lines that might just be helpful just to think about when you're completing the numbers parts of the accounting statements that we just looked at here. So in there. Okay, so number one, that's our balances brought forward. I think I mentioned this, that it must be equal to line 7, our funds carried forward from last year. So our closing position, therefore, obviously becomes our opening position. That should be nice and straightforward, just making sure that you've got the correct starting position from what you submitted last year, or if you're restating and you therefore have an updated box 7, make sure you're using that new one for your line 1. Okay. Line 2 is precepts or rates or levies in the description, but it's precept only for council. So rates and levies refers to drainage boards because they also use the same form. So all you want to show is the precept. Also be mindful if that when your district council pays out the precept, if they give you anything else alongside that, make sure you're just showing the value of the precept in line 2. So if they give you any other money, grants, etc., that's stripped out. It's just the precept that goes into line 2. Line 3 is, I'm just going to mute that one there. Line 3 is total other receipts. So that's any other income that you've had in. So not bank transfers. If you're moving money internally between your accounts, do not count them because it's going to overstate your accounts. And also remember to exclude VAT if you're working in income and expenditure. So if you charge VAT to customers or if you had VAT back from HMRC from claiming it back, you do not include it in box 3 if you're in I&E. If you're in receipts and payments, you do because it's gross totals. Okay. Also one that catches people out sometimes as well, that if you've had credit notes over payments to suppliers, and you've had money back, the supplier has paid you for an overpayment that you've made or a credit that you've claimed, that is not a receipt entry for box 3. It's a correction to box 6. So if you've overpaid the electricity company, they send you some money back, you need to show that in your box 6 figure, not line 3 other receipts. Just because you've received it doesn't mean it's a true receipt. It's not actually income relevant to the council. Okay. Line 4 is staff cost. So just make sure that you read the practitioner's guide about what can be included, but basically it's your core salary cost. So it's salary, tax, NI, pension. It's not things like training, or if you have a payroll company, it's not their payroll admin fees. It's just core salary costs that go into line 4. Line 5 is loan interest capital repayment. So if you've got a loan and you're making repayments against that loan, that needs to be shown separately in line 5. Okay, so likely PWLB, but any loans and repayments that you're making in there. And then line 6 is all other payments. So all the payments that you've made, not staff costs, not loan repayments, and the same things that we just mentioned when we talked about other receipts. So it's no bank transfers here, again, so not the other side of any movements of money. Excluding the VAT, if you're working in income and expenditure, receipts and payments, gross totals. And again, if you've got customers where you've received income and they've then cancelled the booking, say they've hired the hall and then they don't want it and you pay them some money back, that's not a payment. It's a correction of income that you'd received. So it's a correction to your box 3. So just be clear about that and don't overstate those box values as well there. And then line 7 is the sum of the above. So you need to make sure that it adds up. And I have seen many AGARs where it doesn't actually add up and often sometimes the external auditor hasn't even picked up on it. So line 1, our opening position, plus precept, plus our other receipts, less 4, 5, and 6. So less our staff costs, less our loan repayments, less our other payments, needs to equal box 7. So again, as I said, make sure it adds up. You do need to round to the nearest pound when you're filling these in, so there may be an odd rounding error, and that is something that also is one of my little bugbears about this rounding thing as well, that catches people out. So do just do that as well. And then line 8 is your total value of cash and short-term investment. So that needs to equal your bank reconciliation. So you need to complete a bank rec that you'll send off with this documentation to the external auditor, and it needs to equal your box 8 figure. And as we talked about earlier, if you're working in receipts and payments, your funds carried forward in box 7 will be the same as your bank rec in box 8. So they will be the same value. If you're an I&E, they won't be because of the VAT adjustment, because of other adjustments that you've put in. That won't have affected the bank. And the bank is just obviously reflecting the actual money in and out that you've got in there. Okay. And then moving on, we've got line 9, which is our fixed assets and any long-term investment. So obviously another thing that you can be doing between now and the end of March is making sure that your asset register is up to date, ready to go for any assets or disposals. Make sure again you're consistent in reporting. So most councils tend to use the original purchase value. And that's one of the other things that the practitioner's guide may update about, because it's not very clear on any methodology around the asset register, just that you need to be consistent. So do make sure that you are consistent with that, and that you've got an asset register that supports the value that you're putting into box 9. And also remember no depreciation. So at this point, it's simply when I buy an asset, it goes in box 6 to that payment, and I have it on the asset register. When I get rid of it, it comes off the asset register. If I get any proceeds for selling that asset, it goes into box 3. Other than that, that's it. And then finally, line 10 are our borrowings. So that is how much we owe as a total at the year end, so at the 31st of March. That's usually loans from PWLB. So there is a schedule published of that, but you should obviously get this loan statement so you can fill that in based on what you owe. Okay, so other documents, as we talked about, the bank rec, so you must agree to box 8. If you're working in income and expenditure, you need to reconcile between lines 7 and 8, so the adjustments in the VAT differences that break that down so you can display that. And also you'll need to consider whether you have any variances between the current financial year and last year. So I very much summarise this here, because you do need to check the specific requirements of your external auditor, because all of them are slightly different as to what variances they require. They will provide you a variance schedule spreadsheet that you put the values into, and it will then flag if you need to explain it. But generally, variances over 15%, or if over 100k, even if that isn't 15%, you will need to explain. And also if line 7 is more than double line 2, which would basically mean your funds carried forward is more than double your preset, which would mean you're holding a significant number of reserves, and therefore you would just need to explain that. If you've got reserves, that's absolutely fine. You just need to list them, but it's just understanding why you're holding quite a considerable amount of funds. And if you need to explain those variances, please make sure you give very clear explanations with numerical values involved. If your other receipts have gone up because more income, because we hired out the hall a little bit more, you can't just write that. You need to be very clear about providing breakdowns of values that make up the variances, so it's very clear that you're understanding the variances, but also you're explaining it in full as well. Okay. So we're getting there, we're getting somewhere. And let's imagine now that we've got to a position where we have a completed AGO, or ready to have the meeting anyway and finish it off. So this bit I will skip through a little bit, just because we've got a lot to get through, but you can come back and review this in a little bit more detail later on. So we have an AGAR, the RFO signs the accounting statements. We have our meeting to sign off and approve everything. We can receive and note the internal audit report. The annual governance statement needs to be completed as the council itself, and then approve it. Approve the accounting statements. If relevant, you would then also be approving at this point the certificate of exemption. And the chairman and the clerk signs the annual governance statement, and the chairman signs the accounting statement. So this is key. This all needs to happen. And again, this is something that I often see the external auditor picking up on, about things being approved not at the right time and setting things correctly. So make sure you go through that meeting and get that done before you then set the period of exercise of public rights, which is what this is. So the next part of this process is that the accounting records must be made available to view by any interested person. So they can then have a look at that. Electors can raise questions. You must approve and publish the AGAR before the inspection period starts, which is what I just mentioned about councils getting pulled up on not getting this done in time. So make sure you have that approved, the meeting is done and it's all dusted before you then start that period. The period must be 30 working days long and include at least the first 10 working days of July. So make sure as well you check on the calendar. When you get the paperwork from the external auditor, they do also normally give you a recommended time period that makes sure that you get that in, but you can change it if you need to, providing it's the length, the 30 working days, and includes the first 10 working days of July, because this is something else that often I see gets pulled up if they've got that wrong. Okay, so do check that as well. So if you're exempt, you're going to send the certificate to the external auditor. If you're not exempt, you're going to send them the AGAR and all the relevant paperwork, bank rec, any other information, etc., etc. If you are exempt, you will then basically publish everything on the website. So all the AGAR and all the other bits will go on there, because you've exempt from audit, but you've got all that information that you're then going to be able to publish on the website. If you're not exempt and you've sent it off to the external auditor, you can publish some of it when it first then goes off, so the AGAR, but also a declaration that the accounts are as yet unaudited. with the other details. So that will then be pending on waiting for it to come back. So you need to have, assuming that the deadline will be the same, 1st of July is when it needs to be with the external auditor, unless you have gained an extension for that. And then the documentation needs to be published by the 30th of September. So you need that back from the external auditor. Last year, there was quite an issue with quite a lot of clerks and councils that we heard from where they were waiting quite late on to get that back, and questions were coming back with very little time to then go back on it. But hopefully that will be something that's ironed out and be better this year with the external auditor. But once you've got that back, you would then add this further information, so the conclusion of the audit, and then that updated version with the external auditor report and their certificate. Okay, so finally then, let's get into the last little section, just thinking about next year as well, because obviously once we get to the 1st of April, you're going to be concentrating, I've got to get this AGAR done, thinking about the current financial year, 25-26. But actually, obviously, as well as that, the 1st of April is the start of the new financial year. So in the most part, you're going to need to be working on that financial year whilst thinking about last year as well. So this is something else to think about at this point to get you in the best possible place to be able to work on next year as well at the same time. So get that cash book set up for 26-27. And this might also be a good time to think about, when you're doing that, can I objectively review it? Can I look at it in terms of what's happened this year, how easy or hard it is for me to complete the AGAR in the year end? How can I improve it? So is the accounting system fit for purpose? If you've been there a while and you've inherited something and actually it's not really working for you, did you get any training on it? And that's something that we hear a lot, that you get a clerk and they're just handed a bag of paper and off they go and have to find their own way through everything. Does it suit the needs of your council? If it's 10 years old and maybe it's a spreadsheet and that was great at that point, but actually things have significantly changed and maybe we can make things a little bit better. So how could we improve it? What could we do now? Because it tends to work quite nicely to start afresh, better information from 26-27. And that might be a change of medium. So moving into to software, or if you're still in paper, in a book, use a spreadsheet, for example, or maybe that coding structure, maybe the way it's set up could be improved. So very basically, sounds obvious, but your cash book should be based on your council budget and your preset breakdown. So often we see a lovely, people come to Scribe and they've got a lovely budget, it's all set out, codes is listed, budgets are shown, great. But their cash book, their spreadsheet they're using bears no resemblance to that. So if you said, actually, what have we spent against these budget lines? Simply don't know. How much is it costing us to run the village hall? We don't know. So that's important. Allocate your transactions out to those budget lines and group like ones together so that you can report on them. If you do want to know how much it costs to run the village hall, be able to group them together as a report. So think about making sure you've got enough codes so that you're not just got a sort of a pot of general admin and everything goes in there and it's really hard to understand what you're spending. But equally, don't have a code for every single item and have codes that you never use. Don't make it overly complicated, making sure you're grouping things sensibly together. And make sure you've got enough information in there as well. Are you recording the invoice number? Are you recording the VAT number? When you're thinking about collating the VAT, like we talked about, is it a great long process of having to trawl through the filing cabinet because you haven't got the VAT number in the cash book? Things like that. And then very briefly, I mentioned as well, a little extract there about the future of the AGAR. So John mentioned this at the start as well. So NALCA looking at improvements that they can potentially make and issues that we have with the current format, and lots of questions were asked and people could give feedback on that. So the current proposal for the changes there is, firstly, is the forms that we get imminently for this current financial year will be accessible. So roughly the same content and requirements, but they will be accessible format. Then next year will be the digital AGAR. So users will need to submit the AGAR using digital methods. And then there's some trials this year, as we'd mentioned at the start as well. So to see what that might entail and what that involves. And then later on, so in the winter of 2027, for use from the next financial year, so March 2028, it will likely be an updated version. So there'll be potential further requirements around supporting documents such as a balance sheet, and also things clarified where there have been issues previously, such as the treatment of assets. So this is something to sort of be aware of. Don't be hugely scared about it now, but obviously if you can be in the best possible place in terms of being prepared, having a good cash book, then these are the sorts of things that you can sort of move with as you need to. Okay. So finally, you'll be glad to know I'm nearly at the end of this today. It's just a final slide on some what I think are really helpful resources, particularly that top one, which is the practitioner's guide, which I've referenced a couple of times. But lots and lots of links to things that might be useful in there. I'm not going to go through all of them now, but do have a look at them if you need sort of any help and support. There's some useful links within there. So there we go. I am finally through that. Let me stop sharing and hand back to John.
Excellent. Thank you, Hannah. We are running a little bit behind time, but you're okay to go over the allotted time, Hannah?
Absolutely, yes. I
Awesome.
tried to cram it in as much as I could. I knew I was going to go on long, so yes, I'm totally
Good, good. So I'm briefly going to go over to Stuart. It's going to give a sneak peek at Scribe accounts, how it can support you in year end, and then we'll get stuck into the Q&A. Over to you, Stuart.
Absolutely. Thank you very much, John. I will be as quick as possible because I know there's so many questions coming into the chat there. So I'm going to start sharing my screen and just show you some of my highlights in regards to Scribe and also how it can support you with year end. So you've got your landing page here and you've got a nice overview of your accounts. My Scribe account here is in receipts and payments mode. It does work in income and expenditure as well, just be aware. But yeah, I'm going to click in my year end tab to begin with just here to stay on topic and click my annual return. And Scribe does all the work for you. So it generates your AGAR, it's ready to go for your audits. And if I go ahead and click the filter button just here in the top right-hand corner as well, I can break down boxes 3 through 6 to see exactly how we came to those totals. So Scribe will do that work for you. Explanation of variances is really important as well. So if I go into explanation of variances just here, you can see that you've got last year and the current year. It has got your variances as a monetary value and a percentage as well. And all you've got to do is put in your explanation in this right-hand box. And if I click explanation report, again, Scribe is going to generate this report for you. It tells you if an explanation is required, if you're over 15%, of course. And any of those notes you typed in for those explanations are going to appear just here on the right. Now, also into the summary report very quickly, this is one of our most downloaded reports of Scribe. And the reason why is it gives you a snapshot of exactly where your accounts are from the day that you've selected it. So I can see my receipts, my payments, and I can see my net position as a monetary value and a percentage as well against all of my budgets. I'm then going to hop into VAT. Now, I am not registered in this Scribe account, but Scribe absolutely works if you are VAT registered and using Making Tax Digital. But if I click the VAT form 126, again, Scribe does all that work for you. It pulls all the information that you've put in through the year. And of course, everything you see today, downloadable, printable as well. And you can also export into a PDF, Excel, and so on. Lots of other options here too. And then the last one, I said I'd be quick. I'm just going to go into reserves very quickly. Really important as well. Scribe keeps track of all of your reserves balances for you in regards to your earmarked and capital reserves. They are all on this report, and you've got your totals at the bottom. So yeah, I was very conscious of time. That is some of my highlights. Scribe does loads more though, and I believe John is going to put a link in the chat. So you're welcome to go onto that link and register to a full demonstration of Scribe with us if you wish. Thank you very much.
Awesome. Thank you very much, Stuart. So Hannah's talk, she covered a lot and it can seem a bit overwhelming, but we will share, as she said, the video, the recording and the actual slides, but that'll be form of a toolkit where there's other things within it. So you'll get, I'll share it after the event because I need to update the training video here because that's on last year's video. So we'll be doing that, but you'll get the video, slides, step-by-step guide and a checklist in there, which is quite useful.